So, while Bitcoin is bleeding out and pretty much everyone is panicking, one of the world's most watched investors just made a huge, and I mean huge, contrarian move. We're talking about Cathie Wood of ARK Invest. She didn't flinch during the recent flash crash. Nope, she bought. And she bought hard. All right, let's get into it and see what she's seeing that maybe the rest of us are missing. First, let's just get a sense of the chaos here. This was not some minor pullback. We're talking about the crypto market losing over $8 trillion in value. You had that flash crash on October 10th that just vaporized leveraged traders. And then, right on top of that, you get news that MSCI might kick Bitcoin treasury companies out of their indexes. I mean, it was just a total perfect storm of fear. And this is where it gets really interesting. While pretty much every other investor was, understandably running for the exits, selling off to stop the bleeding, Cathie Wood did the complete opposite. She saw all that chaos not as a warning sign, but as a massive, massive opportunity. She literally ran toward the fire. So what does running toward the fire actually look like in practice? Well, for starters, she started trimming her position in Tesla right near its highs, and then immediately rotated that cash straight into crypto assets that were getting hammered. She was aggressively buying up shares in companies like Coinbase and Circle, the stablecoin issuer. And listen, this wasn't some tiny speculative bet. These moves brought her total crypto exposure up to between 12 and 13% of her main flagship fund. That's not someone just dipping their toes in the water. That is the move of someone with absolute maximum conviction that the worst is probably over. But to really get why she has this level of conviction, we have to zoom out. We have to look past just crypto and at the big macro picture. See, her bet isn't really just on Bitcoin. It's on this huge deflationary wave that she believes is about to crash over the entire global economy. And what's so wild about this is how much it goes against everything we've been hearing. I mean, for months, right? It's all been about sticky inflation and the Fed has to stay tight. Cathie Wood is looking at the world and seeing the exact opposite. She thinks both the market and the Fed are totally ignoring these flashing red signs of deflation. And this isn't just a gut feeling, She's pointing to very specific data. She's looking at the high-skilled labor market getting weaker, oil prices dropping 20% from a year ago, rents starting to fall, and then there's the big one, the huge long-term deflationary pressure from technologies like AI. Let's just zero in on that labor market point for a sec. Yeah, the overall unemployment rate ticked up to 4.4%, but look at the number for new college grads. It's over 10%. That is more than double the headline rate, and it signals real weakness at the high-skilled end of the economy, which is a pretty powerful leading indicator. So what happens when the central banks finally wake up and realize they're way behind the curve on deflation? Well, they don't usually just gently tap the brakes. They tend to panic, and they cut rates hard. Cathie Wood is positioning for that exact moment, what she calls a massive liquidity wave that's going to come flooding back into riskier assets, like crypto. Okay, so that's the big macro story. But what about crypto itself? I mean, why does she think the bottom is in right now? This is really the second pillar of her whole thesis. And it really all boils down to this one simple but super powerful idea. In her mind, all the bad news, all the stuff that could possibly cause a massive sell-off has already happened. It's public knowledge now. There aren't any more monsters hiding in the closet. So her logic kind of breaks down like this. First, a lot of the selling wasn't even about fundamentals. It was just mechanical. Exchanges had to sell Bitcoin because it's the most liquid thing they have to cover margin calls. Second, all that bad news, the crash, the MSCI threat, it's all out in the open. Which means third, all that fear is now fully priced in. So when all the forced sellers are gone and the asset is still standing, well, that's how you build a foundation for a market bottom. And it's so important to understand how she thinks about Bitcoin in all this. To her, it is not just another speculative crypto coin. She sees it as this multi-trillion-dollar idea that's really three things at once: a new global monetary system, a brand new technology, and the undisputed leader of an entirely new asset class. That's why it leads the whole market. So we've got the why, right? A deflationary macro setup, plus a crypto market that's already hit bottom. But now let's look at the how. What are the specific bets she's making to actually play this out? Okay. And here's a really interesting wrinkle. There's a difference between her ideal crypto assets and what she can actually hold in her fund. See, because of fund rules, she can't just go out and buy Bitcoin directly. So she buys the next best thing, what she sees as a proxy. Bitcoin is her number one, the main gateway for institutions. So she owns Coinbase. Ethereum is number 2, the infrastructure layer, so she's holding Robinhood as it moves into that space. And for stablecoin exposure, she owns Circle. So when you boil it all down, her whole strategy is a bet on the picks and shovels of the crypto world. Instead of just owning the gold, she's owning the companies that sell the tools to the miners. The on-ramps, the exchanges, the wallets, the stablecoin issuers, all the foundational stuff that the entire ecosystem is built on. And that brings us to the final and maybe the most powerful piece of her entire argument. The macro is set, the market has hit its low, but there's this enormous catalyst just sitting there, waiting in the wings. And this is the thing you absolutely have to get. She believes the potential upside here is just astronomical because the real money, the big wave of institutional capital, hasn't even shown up to the party yet. What we've seen so far, that's just the opening act. So who are we talking about here? Well, we're talking about the clients of the major wirehouses, the absolute giants, Morgan Stanley, Bank of America Merrill Lynch, Wells Fargo, UBS. Right now, today, none of them have approved the spot Bitcoin or Ethereum ETFs for their advisors to actually recommend to their clients.
And that phrase on their platform, it sounds simple, but it is a massive, massive deal. It means that thousands upon thousands of financial advisors who together manage trillions of dollars can finally officially put these ETFs into their clients' portfolios. It basically turns on a fire hose of demand that right now is completely shut off.
So you can see the sequence of events she's laying out here. We just went through the bust, the really painful part of that 4-year cycle. She believes we're now in the setup, where the bottom's in. The next step is the catalyst. The wirehouses look around, see the cycle has reset, and finally give the green light. And that is what unleashes the wave of all that advisor-led money.
So let's just put it all together one last time. Her thesis is really this perfect storm of 3 things hitting at once. On the macro side, a deflationary wave that forces the Fed's hand. In crypto itself, a market that has already bottomed out with all the fear priced in. And finally, the catalyst. Trillions of dollars in institutional money just waiting on the sidelines for approval.
Now look, could she be wrong? Absolutely. The bottom might not be in. Institutions could stay on the sidelines for years. But Cathie Wood has literally built her career on making these super high conviction calls right at what she sees as major turning points. And right now she's basically shouting from the rooftops that this is one of those moments. The question for all of us is she right?